Well, we've been talking a lot, not just about ideas. We've also been talking about realities on the ground. And when rubber meets the road, as the good old American saying goes, we need to hear from providers. We need to hear from the folks that are working to facilitate experiences and enabling environments. And to lead that discussion, we welcome Ahmed Dermish. Ahmed.
Great, thanks. Thanks, Frank. Afternoon, everybody. This is the penultimate session. As Frank said, we're going to spend the next hour or so hearing from some providers who are on the front line of offering services to many of the clients that we've been talking about over the last day and a half. And to pull on that metaphor a little bit in terms of being on the front line, we've been talking about infrastructure, we've been talking about policy and regulation. If you could imagine, the mountaintop, this vision of responsible finance, financial health, well-being, we have regulators who are defining the roads that you can take. We have infrastructure providers that are defining the size of the bag, all of these components, but who's going to carry it to the top of the hill? In many ways, it's the provider who is that interface with the client, who ends up taking on the responsibility of the journey up a difficult path. So we can look at that in different ways. Whose responsibility is it to make that path easier? Is it your responsibility, et cetera? So that's less of the question, but just this acknowledgement that there's a relationship between how these service providers orient themselves towards the problem that we all collectively want to solve. So today we have providers from Kenya, Brazil, Colombia, and Mexico who are going to share with us a little bit more of their business model, how they work with clients, the problem they're trying to solve. The format of this is going to be a little bit rapid fire, so 5 or 6, 7-minute presentations. There'll be an opportunity for one question, maybe two. And we'll go through them so you have a nice rounded view, and we'll conclude with a brief panel discussion and then opportunities for conversations from everyone. And the way we're trying to connect this session with the earlier conversation in the day is simply asking ourselves, what is that pre-existing environment, that enabling environment that allows innovations to flourish in the markets where we work? Is it digital infrastructure? Is it enabling policy? Is it access to capital? Is it all these things combining? And we talk about innovation and we talk about service providers, but there's so many variations of that. Is it too far to ask ourselves, are there certain archetypes of innovations that work best in certain enabling environments? And maybe by listening to the providers themselves, we might get a sense of how they operate in the environments they're in. And at the end of the session, I want everyone here to start thinking about maybe what can we do to improve certain aspects of the enabling environment. I'm a policy guy, so when you say enabling environment, I tend to think policy, but in many cases, it's so much more than that. It's about policy getting out of the way. Maybe it is about infrastructure, maybe it's about privatization, maybe it's about creating public utilities. There are so many different ways of thinking about that. So that's what I would like you to think about as we're going through the presentations, just thinking like, what is allowing this to happen? So I think for time's sakes, we're going to move straight on. The 4 providers that we're going to hear from today, the first is Paula Araguiv, the COO of Mercado Pago Brazil, Josh Allen, the head of data science and credit risk at Pezesha Kenya, who we heard from already today. Miguel Ledondo, COO of Monet Colombia, and Pedro Moura, CEO and co-founder of Flourish FI. Now, to give you a sense of the range of services, Mercado Pago, I think most people here, possibly, particularly in the Brazilian context, understand. It's a financial service provider that's part of the Mercado Libre marketplace digital environment. Pezesha is an SME financing, embedded finance platform. Monet is a digital retail credit provider that operates under the open finance ecosystem. And Flourish FI is a technology solution for banks to offer services that improve the well-being and financial health of their customers. So there is that range of services that we're talking about. And I think to kick it off, we have Paula. Hi, Paula. There you are. Paula, can you hear us okay?
I can hear you perfectly. Can you hear me?
Yes, lovely to see you. Over to you.
Okay, thank you very much, and thank you for the invitation of being part of this panel. As you said before, Mercado Pago was launched as the fintech arm of Mercado Libre. Mercado Libre is today Latin America's biggest digital e-commerce platform. So the synergies of combining together an e-commerce platform and a fintech platform is very, very strong and gave us the opportunity to move forwards in financial inclusions and bring a lot of impact in different countries of Latin America, not only Brazil. I was part, and let me start by sharing my screen so we can all be in the same page. A quick introduction. I've been part of Mercado Pago since the beginning, first employee, so I've known very well in detail all the journey that we've been through in these last 20 years. I will go in a very brief deep dive of how that journey looked like, but let me start showing you a video that shows today what Mercado Pago and Mercado Libre means to Latin America.
Mercado Libre is one of the largest and most innovative technology companies in the world. Over the last 25 years, we have been driving progress in Latin America through commerce and financial services, delivering growth opportunities that generate shared positive impact. Our ecosystem, formed by Mercado Libre, the e-commerce business, and Mercado Pago, our digital bank, links individuals and small to medium-sized enterprises, all the way to major retailers and renowned brands. At the end of each quarter, we have reported consistent and substantial results, which guarantee profitable growth across our business, thanks to our long-term vision. For over 25 years, we have been imagining and creating new ways to democratize commerce and money in Latin America, generating a profound transformation for our millions of users. We are proud to be a Latin American company that continues to grow as a global benchmark and drives progress for millions of people in all corners of the region. From Mexico City to the southern tip of Chile, the transformative power of our ecosystem makes life easier for everyone to buy, sell, develop businesses, and improve their financial health. Guided by clear processes, governance, and good practices, at Mercado Libre, we act to minimize the impact of our operations as we grow, generating a positive socio-economic impact on the communities where we operate. Mercado Libre's impact has been recognized worldwide, and we have become the workplace of choice for thousands of people all over the region. The best is yet to come.
So that's a little bit about the present, but let me tell you about what we've been doing since these last 25 years for Mercado Libre, 20 years for Mercado Pago. We were born 4 years after the marketplace was launched with this first and strong mission of processing digital payments for our marketplace and having into consideration the fact that in Latin America, less than half of the population was banked or nearly underbanked. So since the beginning, we had this very strong mission of making digital payments and financial services available for everyone. So starting inside Mercado Libre, then we opened our platform for any other people or company who wanted to receive digital payments outside the marketplace. And then we reached also physical worlds with MPOSs and QR codes, very inspired to what we saw occurring in China and trying to bring some of that point of view and synergies to a region that was very similar in order of financial KPIs. And once we developed this whole solution of payment processing, both in digital and physical world, we understood that by the way in which we did that is what not entering from the top of the pyramid, but from the bottom of the pyramid, just payment tools was not enough. So we started to create this whole ecosystem of financial services to complement the fact that underbanked and unbanked people were now receiving money in a digital account. So we launched a prepaid card, we launched alternative credit lines. Now we have our own credit card, only based in transactional scores and not the traditional banking scores that leave most of these people out of access to this type of projects. We launched investments and saving tools for the base of the pyramid. We then incorporated insurance policies. We've been distributing insurance policies since the last 2 years. We've reached more than 12 million policies portfolio by the time we are now talking. So this huge potential of expansion that we see bringing this type of services and complementing the offer of not just processing payments, but also being able to provide the other pillars of financial inclusion to the base of the pyramid has been mainly what been motivating us since the last 20 years working in the region. This is what I was telling you about. We didn't start from the top. That was an area very occupied by traditional banks and traditional acquirers. So we went from the very base of the pyramid, reaching what we call the low end of the long tail. So basically people selling cheese on the beach or these micro entrepreneurs needing to incorporate more tools to their daily basis. And once we penetrated the base with payment tools, we had this enormous opportunity of massive inclusion into the rest of the financial services. So here we are today, not just providing financial services to our sellers, but also expanding these financial solutions to the millions of unbanked and underbanked people all through Latin America. That is just to make the introduction. Happy to come back in a few minutes later and discuss with the rest of the panel. Thank you very much.
Thank you, Paula. That was a great, amazingly efficient intro for such a huge operation. You know, we started the conversation in terms of what is the infrastructure that you need to create innovation. And one solution is just to be the infrastructure, just to create it. And I think just that timeline is fascinating as you saw the use case start from merchants and then expand out, building in the systems that aren't available. So why don't we just host our own fintech solution within our e-commerce environment? Now, there's a question if you can do that when your market's as big as Brazil. So I think, you know, the opportunity to see that scale, I think, and that integrated model is interesting. So I want to invite Josh up now from Pesesha to sort of maybe give us an alternate view from the perspective of the Kenyan market. Go for it.
Fantastic. Thank you very much. Can everyone hear me okay? Perfect. Hi, everyone. Big thank you to the CFI team for inviting me here today. I'm going to spend 5 minutes just talking about what Pesesha do, and obviously welcome any questions later on. So, Pesesha, people find it hard to pronounce. It's a Swahili word. Is the mic okay?
Yep.
Yeah, okay. Swahili word that basically means financial enabler. Pesesha's mission is to provide widespread access to affordable credit and embedded financing solutions across Pan-Africa. Go to the next slide. Thanks. Fantastic. So we started in 2016 as a consumer lender, but then pivoted in 2020 to what we call embedded finance. So our core business model is we integrate into distribution networks, value chains, to provide embedded credit financing solutions for stock purchases and inventory. We're currently in Kenya and Uganda. We have ambitious plans to scale into the rest of Pan-Africa, probably in 2025. We have a proprietary credit scoring technology called PataScore. This is the backbone of all of our credit scoring, decisioning, fraud detection technology, and is ultimately the decision maker in terms of who gets credit and who doesn't at the end of the day. So the little infographic at the bottom left kind of depicts how the business model works. Now, I think Mercedes made a really interesting point before about the use of their capital, the use of funds. And that's one thing we've done a lot of work to try and control. So within these value chains, the customer will not actually receive the funds. They'll receive the stock or the inventory, and then we'll pay the supplier or the distributor, and then the funds will be sent back to possessor at the end of the term of the loan. So this control of the use of funds allows us to mitigate a lot of the credit risk and ensure that the money is being used for productive purposes, such as stock purchases. Now, many people always ask me, what is a typical customer of Possessor? So at the bottom right, we have one of our customer stories, a woman called Rose. A typical customer in Possessor is called a mamamboga. Mamamboga is the vegetable lady, the woman on the side of the street selling her vegetables that she's cultivated on a small piece of land or obtained through farmers in the local community. Rose came to us in 2022 through one of our agri distributor networks. And initially, she wasn't unable to get credit. She had a very low credit score. She hadn't been transacting very much with the distributor. We didn't have a lot of data, so she was non-fundable. But through our financial education program, we were able to help her build that credit score. She started transacting more frequently, building up her transaction history. And eventually, she was eligible to get credit and took a loan of around $100. Over the next preceding months, we also have a step function in terms of the graduation model. She was able to get to 300, take on some new employees, and expand her business. Obviously, this is a wonderful success story of one of our customers, and there are many more like it within our ecosystem. So I guess what is the problem that we're trying to solve here, and what is the scale of that problem? So in the top right, these numbers are from the IFC, so maybe our colleagues in the room can confirm whether they're true or not. But SME financing gap across Africa, Pan-Africa, is estimated to be 640 billion. Around 320 billion of that is in East Africa alone, and around 130 billion in the markets in which we operate. To put these numbers into context, Kenya's GDP is about $100 billion. So we're looking at $130 billion financing gap in East Africa alone. So the scale of the problem is enormous. And Possessor believes with time, we have part of the solution. Next slide. Thank you. So I guess, why does that SME financing gap exist? I think there's many reasons that are pretty well understood amongst this audience. Informational asymmetry, customer over-indebtedness, poor financial literacy. We can talk about those in a lot of detail. I think one that we want to talk about a little bit today is the financial education piece, which in Possessor we see as the reverse informational asymmetry. A lot of the information we've got from surveys is that customers don't actually understand the credit products that they're taking. They don't understand the repayment schedules, the interest rates. If they're being rejected, they don't understand why. Obviously, one of the big reasons for rejections is that they have a negative listing on CRB. Many of them don't even know they have a negative listing on CRB. They were never told, maybe they didn't get the message or the email, or they don't really know what CRB is. So we engaged in a partnership with CFI late in 2023, and we introduced this concept of positive friction. Now, I'd like to just get a show of hands for who is familiar with the concept of positive friction. Who's heard about it before? So you can just raise your hands. Okay, so not too many, probably less than a quarter of the room. We hadn't heard about it either. It was a brand new concept to us. So at Possessor and other DCPs, the mission is always to reduce friction, remove collateral, documentation, paperwork, digitize the process, same-day disbursements. So that is the goal. So the idea of bringing friction back into the customer journey is a little bit, we don't like it. So we try to avoid it as much as we can. But CFI introduced this concept last year, and basically positive friction is introducing additional friction points into the customer journey with the goal of enhancing their understanding of the products or services they're taking, hopefully leading to better customer outcomes and better outcomes for Possessor as well. So we spent 2 days working with the CFI team trying to figure out what is the right type of positive friction and what's going to have the biggest impact on our customers. So we basically decided to do a quiz. Once the customer has been given a limit and the application has been successful, they just needed to answer a few questions. And this is to take them through a journey to make them think about the product, make sure they understand the terms and conditions, and provide a feedback mechanism as well for Possessor to build its financial education programs. So there was 3 questions. The first was around the due date. Like I said, many customers don't know when their loan is due. They forget, or maybe they don't take note. which means they'll be late and maybe listed on CRB as a consequence of that. The second is the amount. When presented with interest rates, APRs, our traditional customers aren't particularly familiar with these concepts. So we broke down the concept of an interest and put it in monetary terms just to make sure they understand exactly how much they need to repay at the end of the day. And the third was on the penalty structure. We don't like charging penalties at Possession, but there needs to be some kind of incentive for customers to pay on time. So again, just making sure they understand the penalty structure. So for those that received the quiz, the accuracy rate was 90%, which may sound pretty good, but actually that means 10% of our customers don't understand their products that they're taking on. And if you think about those 10%, it's very likely that they'll probably end up defaulting or at least being delinquent in some way. So for the customers that did receive the quiz and were exposed to the treatment group, we saw a 10% increase in the on-time repayment rate. So obviously one of the questions was linked to the repayment schedule itself. And clearly there's a significant impact there on repaying on time. The second was the PAR 90. So this is our default definition. We saw a 15% reduction in PAR 90. Again, this is likely attributed to either the penalty question or the question around the total repayment value. And lastly, for those who got all 3 out of 3, again, there was an increase in the repayment rate of 12%. Now, one thing I'll caveat is the sample size is still small. We have about 600 customers in our pool. I'm very pleased to announce we're going to continue the experiment for the rest of the year to try build up more and more information and improve this process as well and the positive friction experiment. In terms of where we go from here, we've identified a few really good use cases. One is on our collection strategy itself. So those who maybe didn't answer the questions correctly, how can we use that from a collections modeling point of view? The other is obviously, of course, financial education. We have big financial education programs. This can help inform that process. And thirdly is on credit scoring itself, using this behavioral data now in our credit scoring algorithms to improve the performance of those models. So I'll finish there, but obviously welcome any questions later as part of the discussion. Thank you.
Two minutes to spare. Is there one question for Josh, or move on? All right. I think what's interesting, again, we're going back to the enabling elements, and I think, Josh, one of the things you noted a couple times was the blacklisting on the credit bureau. So it's almost as if, despite the existing infrastructure, you had to work around it because it wasn't serving the client base. The link with literacy, building your own systems to do that, partnering with a research firm. So, again, just trying to put the pieces together in terms of how you've gone about trying to solve for these problems, through your business model and through working with the things that are available around you. So now I'd like to invite Miguel from Monet to come up and take us through their business model.
Okay, thank you very much. For an introduction, I'm going to present you Aniuska. She's a 27-year-old woman from Colombia. She lives in Cali, single mother with 2 kids. Every day, she wakes up early, go to the streets, and sell a common fruit in Colombia called chontaduro. She sells up to $30 per day, and that's how she makes a living. However, as million of people in Latin America and in Colombia, she does not have access to formal credit. Therefore, when she needs working capital for her business or needs to solve an emergency for her kids, she can only go to her friends, her family, or to informal lenders called gota gota, which charge high interest rates and even use violence for the collection process. This is why we created Monet, a fintech focused on financial inclusion for Latin America, beginning with Colombia. In July 2021, we created our first product, Crédito para Todos, loans for all. Any person in the country with a bank account or digital wallet and recurring income can use Monet. They just need to do a very brief onboarding process with their ID number, their telephone number, and linking their bank account or digital wallet. Monet was the first company in Colombia to use the open banking concept to create an alternative risk engine. This allows us to work with low-income population. Once the algorithm approves the user, it gives him a credit facility, a revolving credit, between $10 to $200. The user may use this facility at any time, and when he uses it, the money gets instantly transferred into his bank account or digital wallet. The maximum term for these loans are 30 days, and at the payment date, we use technology for our collections based on auto debits and tokenizations. This means we're able to collect the money directly into the user's bank account or digital wallet. Since our launch process in Colombia, we have granted more than 1.2 million loans to users. That's more than $20 million in loans to Colombians. We have reached 90% of the municipalities of the country through this digital strategy, and we have an approval rate of more than 60% and guaranteeing a good portfolio with a default rate under 3.5%. But it's not only about these numbers and the successful case of the use of Monet in Colombia. It's also about the impact we want to make. So we made a study with our users, and we found that 68% of the users that are using Monet for the first time are people with negative reports before credit bureaus or with no credit history at all. This means for the first time, they are getting a formal, secure, and fast loan with Monet. And we also made a study of the users who got loans in the last 12 months with our company. After 3 loans that Monet reports positively to credit bureaus, 10% of these users got for the first time a credit card. 21% of these users were able to get a loan with a traditional bank in the country. And 99% of these users were able to open a new product in the telcos ecosystem. This means, for example, Anushka, she was able to get an internet plan for her home for the first time, or other users were able to get a paid plan for their phones. This growth and this financial impact has led us to work closely with traditional banks in Colombia. So for example, we are now in an alliance with Nequi and Bancolombia La Mano, 2 of Colombia's biggest digital wallets, where they cannot provide loans to most of their users. So what we did is that Monet is inside these apps, so all of the users that are not able to get a loan with them are getting a loan through Monet, while the bank is starting this new information from the user. The user is improving his credit history, and then the bank will be able to provide further loans or other type of financial services. And the other case I want to talk about is that Monet was the first company to use the banking as a service model from a traditional bank, also with Bancolombia. This allows us to give our user further products after their loans. So for example, Anushka can now go to the local store when she needs more products to sell the fruits, scan a QR code with Monet, and pay with her credit facility. This is how we are working in the financial inclusion in Latin America. The first case of use Colombia, but we are aiming to go to the rest of the region and improve financial access and well-being. Thank you.
Any questions for Miguel? Eric.
I wanted to know how many active borrowers you have currently.
Monthly, we have 70K active users in our plan.
Monthly.
Monthly, yeah.
You mentioned that you can deduct the repayment from the income source. So I'm
Yes.
wondering, how does that happen in the informal sector? Like, where does that funding sit that you're able to sweep?
Yeah, in Colombia, there was a change in the access to financial accounts. So after COVID-19, most of the Colombian people has at least a digital wallet such as Nequi, DaviPlata, or Bancolombia La Mano. So while we use open banking to see the transactional behavior and make our risk assessment, in that digital wallet or bank account is where we collect that money. We have different agreements with the banks for each digital wallet or bank account in order to do that collection process. I think there was a question in the back.
Yes. What's the interest rate and the average duration of your portfolio?
The interest rate, yeah. We do not charge our users an interest rate. We have a fixed fee for the transaction. The average fee for this transaction is under $2. So, for example, it's cheaper for a user to get a 100,000 pesos loan with Monet than transfer through a normal channel of the bank into another bank through the transfer bank system in Colombia. Or even it's cheaper than getting into an ATM and getting the money out of the ATM.
And what's the duration of the portfolio? What's the tenor, average
It's
tenor?
30 days.
30 days?
Yes.
2%.
And it's all a revolving line. So once the user pays the loan, he can use it again.
Thank you.
Thanks, Miguel. That's great. Again, I think we're starting to see a trend here. Similar to Pesesha, the existence of a credit bureau doesn't necessarily imply it works for this customer set, but it's very clear that you guys also leverage the open banking ecosystem. So there's an opportunity in itself. You know, the question is who's watching? You know, the regulators that create that space, are they observing how you're using it? I think the questions we just got from the audience were really putting their finger on the responsible aspects of this. So once you have access to that, how do you operate in a way that can demonstrate responsibility while still keeping a business profitable and operable? These do not have to be mutually exclusive, assuming that infrastructure and those enablers are not cost prohibitive, right? So now we're starting to draw these concentric circles a little bit tighter, which puts a lot of pressure on you, Pedro, to show us a little bit of how Flourish FI sort of does its work and to close the loop.
Amazing. Hi, everyone. Pedro here, co-founder and CEO of Flourish FI. It is an incredible pleasure to be here today. I grew up not very far from here in a state over in Natal, and it's really cool to be back in this place. We are a behavioral loyalty platform and customer engagement for financial institution providers. So we help banks, credit unions, microfinance institutions attract and engage customers, especially those new to the banking system. And you all know the statistics pretty well. Banks are spending billions of dollars to redesign the way people interact with finances, but yet 7 out of 10 people in Latin America do not have a dollar saved if faced with a personal emergency, having to rely on really expensive loans. And that to me is really personal. When I was only 15, my mother had to leave this country to pursue a better future in the US. Making ends meet was tough. Saving money was something that was simply aspirational that neither of us knew how to do. I started my career in companies like Chase, Morgan Stanley, and saw that the products there weren't necessarily designed for everyday people. In our case, immigrants in the community in the US, but more broadly, individuals living paycheck to paycheck. I have since then been on a mission to build financial products for individuals and helping them build positive money habits. Through Flourish, we already do this in over 5 countries through our clients, financial institution providers like Banco Solidario, part of the Acción portfolio, Banco Econômico, institutions like Altbank and Willbank, neobanks in Brazil, or fintech lenders to help them collect and incentivize individuals to pay their loans. We are also an official partner of MasterCard to start to distribute our technology across the Americas. We develop our platform in conjunction with top behavioral scientists to help individuals to transact better, build the habit of saving, and spend smartly, while also helping the financial institution with key metrics, from digital adoption, deposit growth, and reducing default rates. Here's a simple application of our tech. We are embedded within the banking app and digital banking. We put a simple widget that creates personalized journey based on key behaviors you want to drive. This can be as simple as top off your cell phone to spin a wheel to a chance to win a prize, to things more complex that perform X number of behaviors will do an increase on your limit. So you can see that you can do rewards based on behaviors that can be monetary and non-monetary, but it can also be personalized journey inside of the banking app that can serve as campaigns, that can serve as continuum products. So the Brazilian central bank is going to do smart picks. You can incentivize individuals to connect their account, stay on automatic payment for X number of times to be rewarded with a cash back into the account. That's an example of the use case of the technology. We also created a financial knowledge module that's a gamified microfinance content that can be embedded in any place of the journey once the loan is dispersed or later on within as customers come back and log in to check their balances on their account. All with simple integration for the financial service provider, and we built integrations with a number of partners, may they be banking as a service or legacy products for banking providers. We built use cases that decrease default rates. We see in the A/B testing that individuals will pay on time nearly 2 times more, and we also will reduce 30-day default rates by 12 percentage points. We also seen use cases of increasing interchange fee for the provider, but also digitizing transactions for the user, and at the same time, having a better repayment rate of the statement. So you can see driving digital adoption, but also good payment behavior. The road ahead is as we start to invest in being the brain for financial service provider to predict, nudge the individuals into better behavior. I met my co-founder at the University of Berkeley. We've brought investors both from a impact as well as traditional financial services. We've been recognized by different folks in the industry, from the private sector to ecosystem builders, for both mixing scalability and impact. And as you see the use cases in Brazil, you folks talked a lot about this, right? Like the increase in debt, you see financial service providers seeking primacy or principality, but you also see the regulatory agenda around financial education, around driving inclusion. So these are key element and trends in which we are seeing as important pieces for our business. But really what motivated me to start the company is for people like Lourdes. She's a Banco Sol customer that only had a micro loan when we started working with her. We started to create incentives for her to have a little bit of saved in her account, to accept QR code in her business, and she's now able to weather financial shocks that she wasn't able to do it before beyond asking for a loan. And now you can see through research that she's less stressed and have the ability to support others in her community. So to me, it's a lot more than statistics. It's about enabling people to achieve their dreams. Thank you.
Well done. Any questions for Pedro before we? None? See? I think what's interesting, Pedro, in terms of how you presented that model is, rather than in the previous examples, a sort of building on or moving around infrastructure in a classical sense, whether it's open finance or mobile money, in a way your infrastructure were banks that were willing to even work with integrated solutions, to take something that's outsourced. I think we can all remember a world where a bank would never give anybody access to their customer data, right? And so there's this question of sort of a change of mindset in the ecosystem and how that becomes a precondition for what we need to change, right? So these are things, again, where certain successes drive other successes. So we're gonna move on to sort of a group discussion now. And the question I'd like our panelists, first the three here, and then Paula, I'll have a question for you in a moment. If you had to put your finger on the one or two enabling elements of your models, what would they be? Because as part of the transition, I made that up. I just saw a 5-minute presentation, you described it, you did your pitch. I'm very likely very wrong. So maybe you can correct me. So maybe, Miguel, can you give us maybe one or two of the things that maybe we're not seeing that you built upon?
Yeah, sure. I think, for example, what we have been talking about all day is very important for Monet's conception, that is open finance and open banking. And believe me, Colombia is still far away from the open banking and open finance model in the US, in Europe, and even Brazil. But what happened was that the legal perspective was broad enough for us to implement a web scrapping model at a first stage that allow us to do open banking. And then, after proving that this concept was working and was able to get these loans to this low-income population at a low default rate, well, that suggested to the ecosystem that this is working and provided a further development of the regulatory side. So for example, now we have banks in Colombia with APIs for the open banking and the consulting of the transactional ledger of the users. And the other important point is a very good payment system. Colombia is still far from other models. We don't have a PIX right now, but we still had a good system that allow us to make instant transfers to these users that need the money at the moment. It doesn't matter if it's in the night, if it's a holiday, they need it right now to solve their issues. But we still have a long way to go. Lowering costs, for example, in the system is very important, and mostly when you're providing very short and very low loans where transactional costs are high and you're trying to give the user, well, the lowest fixed fee you can provide.
You're saying the enabling environment is effective, that legal context, which you could operate, test and learn, use customer data, and effectively test your model to try and scale. Josh, how about you?
Yeah, no, thank you very much for the question. I think I'd probably highlight 3 factors. I think number 1 is M-Pesa. For those that haven't heard of M-Pesa, it's the PIX of Kenya. And M-Pesa has done wonderful things, not only in terms of our credit scoring and our algorithms, but adoption of digital financial services, widespread access to internet, mobile phones. And I guess just to contextualize M-Pesa, 90% of the adult Kenyan population has a mobile wallet with M-Pesa. And the uptake is incredible. I mean, if you ever visit Kenya, you don't need cash. You can go anywhere to the most remote parts of the country and you can transact with M-Pesa. So that is a huge prerequisite for us in many senses. I think number 2 is large-scale distribution networks that are tech-enabled. And I think that tech-enabled component is very important because I think in many of these markets in Pan-Africa, you have distribution networks, but it's still, a non-technical process, non-digital process. So with our APIs, we can integrate into these networks and access, millions of customers at once, rather than just one by one and working from the bottom up. I think the last thing I'll probably point to is regulation. So maybe I didn't mention in the presentation, but we're a regulated entity under the DCP, Digital Credit Provider License, but the regulation is still light touch. We're still able to innovate, integrate with different value chain partners, launch new products, and the regulator has not been too hands-on, I guess, at this stage. The main 2 things they're concerned about is pricing and consumer protection. So as long as we, stay within the bounds of those 2 things, we're pretty much free to innovate and, try new things with our products.
No, that's great. It's interesting. The M-Pesa is the PIX, I think, is useful. I don't know if I'm entirely agree with that, but we can talk about that later. But in terms of the universality of access and the fact that access is so ubiquitous, absolutely, and the regulatory light touch is almost the characteristic of the Kenyan environment. There's also a consequence to that is the ability to keep up, right? So light touch and out of reach might be the other side of that. It's really helpful insights. Pedro?
I think for me, like my business wouldn't exist 5 years ago, right? If it wasn't for the increasing competition in financial service providers, if it wasn't in a lot of ways what the pandemic did with cash disbursement and millions of people for the very first time having an account and understanding how to use. So my business sit in the spectrum. It's not about inclusion. It's about the financial health and well-being. And because of the competition, because of the choice, because financial institutions are no longer just providing a commodity and transactional, the institutions need to innovate and innovate quite fast. So they're willing to go into an outside provider that's thinking 24/7 about customer engagement, well-being, measurement, segmentation, all things that used to be done internally when a bank used to hire the best talent in the country. That's no longer the case with big technology providing financial services, retailers expanding financial service provider, fintechs, and banks. So now you have an ecosystem that anyone is a fintech, and you cannot build everything, right? You must work with the best in class to do what you seek to do. Few will be like Nubank that will build everything internally, hire the best AI people, but the trends is that you are putting modules together to create the experience you want to create. So you can talk about that as like central banks pushing a open banking regulation. You can talk about that just like the trend of the industry. But I remember doing my very first pilot in Brazil in 2020 with a Brazilian's larger co-op, Sicub, and it was really hard. We were like, how are we gonna get this data? Open banking is coming, but APIs are not yet ready. And can we give you the data? It's a pseudo-anonymous, but I'm not quite sure. And then you start to see these models, right? And it's just inevitable how it will continue to happen. Who will distribute? Who will be the brain? Who will be the communication to the end user? We are in for a fun ride ahead of us.
I think we're already on the ride. So I think this description of kind of the unbundling of what classically used to be bundled, even from a talent perspective, and just that statement 5 years ago, what you're doing now probably wouldn't be possible, at least here, is exactly, I think, the question we're trying to get at. But that's like a perfect segue. Thank you, Paula, to you. You know, Mercado Pago is huge. I mean, Mercado Libre, on top of that, is an entire ecosystem that covers an entire continent. I would argue that the point that Pedro just made about what is possible today wouldn't be possible 5 years ago is largely because of the success of things like Mercado Pago. And so, you know, the question to you is, you know, in what ways do you feel like the success of Mercado Pago has actually changed how people see what is possible in terms of providing responsible finance at scale to meet people's needs, as you said several times in your presentation, from the bottom up?
Yes, thank you. And I will completely agree with the trends that I'm seeing in the answers of the panel. I think that not only Mercado Pago's success, but many of the Latin America success cases that we've seen have proven that there is a sustainable economic way of make this possible. So we were perhaps pioneer in trying to bring this new point of view, but actually it was the success of many players bringing that as a fact and making some effects on the industry. You can see that Latin America has been progressing a lot in creating and bringing startups with pure focus in financial services. So we have a very competitive environment nowadays that is much healthier than the one that you could see 10 years ago. And when you have competition at the end of the day, you have better conditions for final consumers. So that was great. We had the support of regulators that understood that these new players needed to be part of the industry. So these regulatory trends that we've seen occurring in the region, first recognizing the existence of fintechs and make them part of the photo, occurred like 10, 12 years ago. then we had this very, very important wave of instant payments plus interoperability coming into the scene that made principality and usage much more interesting. And now we are talking about open finance. So that's a very, very good progress in these last 10 years of regulations that came to accomplish the photo and the results that you mentioned before, Ahmed. And finally, I think that with all this occurring, we are now in a position to tell to the rest of the world that financial inclusion is not longer about access. If you can work towards access, then the next challenge is about usage, habit, and principality. And I completely agree with the rest of the panelists that the better the solutions that we build, the more use cases we create for users and more reasons we provide them to take out their phones, their mobile phones, instead of cash. And many times we cannot create those excellent solutions by ourselves. And it is many times the combinations of different actors building and co-creating together that can bring this 1 + 1 = 3. And that for us is something that guides us a lot. If we can partner and bring a solution to the table where we can put our strengths and some other partner can bring its own strengths to the table, that combination and that final result is something that we embrace and try to do a lot at the end of the day to enhance our value prop.
Thank you. That was brilliant, and is a perfect segue into one of the questions that I want to interrogate, because not everything is, unicorns and strawberries, right? We've been talking about a lot of the enabling factors, those things that really drive change when you have good ideas and some grit and some capital, and you have a market that's ready to absorb these ideas. I really like how you put there, Paula, is moving on from access into sort of usage, but meaningful usage, and this collective effort, this 1 + 1. How do all of these bits of the enabling environment stack up, right? But the reason why we're here is because the stack is still insufficient despite the success. And comparing Latin America to the African context or some of our Asian or Pacific context, there's examples of success, but the conditions here in Latin America are also very different. And so rapid fire, and then we're going to open up to questions for the last 5 or 10 minutes, is, if you had to ask this room here to collectively work on an enabling component of your business that would allow you to operate better, so more responsibly, to help more people achieve their goals, whether it's an SME or whether it's an individual or whether it's acting as an intermediary to have a bank help their customers, what would you ask for from this group that we collectively might need to do together to sort of create that enabling context for you guys to operate in a sort of responsible finance context?
I have two quick asks. One is so today we provide our solution to the financial service provider, which is then regulated mostly by some sort of financial institution regulation. But we provide incentives, rewards that is regulated usually by a gaming industry, a lottery industry. And it's really hard to create some sort of sandbox when it goes across. So that's like a clear ask in some of the places that we work with, is like domain expertise regulator, and has you innovating around either another data source or another way of doing things becomes really hard. Don't know what the solution is, but are there sandbox in which we can innovate, show proof case that it is not so burdensome for an earlier stage company be dealing with that? That's one bucket. The other is, and this is partially a shout out to the MasterCard Center of Inclusive Growth and Nubank for putting out data around financial well-being, financial engagement that is also good business to be doing the right thing. So how do we get more data that is aligned on what financial health, financial well-being means, and that is also good business? Because a lot of we're doing the right thing for the consumer, but it's hard to convince the private sector that this does good business. So what are the success cases that we can shine more lights on around data on financial well-being, financial health, that is also more structured and aligned?
Awesome. Guys?
Sure, happy to go next. No, thank you for the question again. I think, I know there aren't many investors in the room, so maybe I'm preaching to the choir, but for those of you that are here, I think one thing Possess has found very hard is this intersection with investors. They want the impact story, they want very high returns, and they want huge amount of growth. And I think the sad story is, in the context we're working, maybe these three don't exist together. So it sometimes does feel like investors want to have their cake and eat it. And I guess my one plead to the investors that are around is to just be a little bit more patient, to trust the process, and maybe make some compromises along the way, because, I believe we all have the same goal in mind. We're pulling in the same direction. But 15, 20% interest rates on the dollar for a small lender like Possession is really, really difficult. And then the investor will win when we're charging 30 to 40% APRs to our customers. So something has to give. So I think that would be my one ask to the investors in the room.
Yeah, cost of capital, sure. Yeah?
Okay. There were two things that were told today. This morning, in one of the conference, someone said that 5 years ago or 10 years ago in Brazil, only 5 banks controlled like 80% of the market. And what you told a minute ago is that every enterprise or new startup is now a fintech and can provide a broad number of services. So I think what I would ask is the financial sector to understand and open their minds that they do not have to control everything. That, for example, when you provide a banking as a service, or when the payment system opens up and it's cheaper for all the actors, they can actually benefit from those results. That's, for example, the case we did with the digital wallets we're working with. We're not actually their competitors. We're using that technology, that changes, to complement their services, and they will benefit at the end from these results.
That's great. Co-opetition, I think, is the probably overused word, but it probably speaks to that. Paula, what is your ask?
Wow, nice. I think that this idea of collaboration continues to expand. I think we've done an excellent job intra-markets. There's a lot to be done to connect the world with this whole and same ambition. And I think that help towards education, to make education a big part of the journey and an essential tool to help more people understand and be part of this world is, for me, required, needed, and where I believe that AI is going to make a huge disruption if we learn how to use well these new tools.
No, that's brilliant. And just as a quick roundup, as we're opening the questions, that was a very balanced to-do list or ask. There's a little bit of the research side, right? And, this convening element, can we get these two parts of the ecosystem to talk better together? Can we get more research on, why is doing the right thing good business? The investor component, I think, Natasha, you asked, how many people do we have in the room? I think that was one of the segments that's not sufficiently represented, for sure. And that might be actually a place where we could action quite a bit, is to, maybe understand those incentives a little bit more in terms of, if I had to put a question, what does patient mean, right? Can we put a number to that? Is it they're currently at a 24-month, time frame. Can we push that out to 48 months, 60? What does that look like? the co-opetition element, right? The dynamics of the market are changing. I'm starting to hear a little bit more policymakers getting in the room now in this conversation, right? Like, how do we actually create an environment where it's sufficiently competitive, we're competing for the right things, and we're not competing for the wrong things. And I think your point, Paula, on sort of stepping back and being a bit more consumer-centric and thinking about education, capability. Again, maybe this is about government getting more involved at that point as well. A lot to think about. We've got 4 minutes and 23 seconds. Questions? David.
Thanks very much. Thank you to all of you. It's very interesting at the end of the day to hear your experiences reflected on some of the themes from the morning. So thank you. One of the big themes for me has been hearing how competition has unbundled financial services. So the three gentlemen on the stage reflect very specialized models in many ways that have evolved. But the big exception, Paula, is you and Mercado Libre, and you've gone the other way, right? You've become a conglomerate with that shot we saw of all the things that you've added. So my question is, under what scenario could you see Mercado Pago unbundling some of its services? At what point do you see the opposite of the synergies that you've enjoyed with the e-commerce platform and so on so far? Thank you.
Thank you so much for the question. And it's really important to highlight that although you can see the expansion of the marketplace into financial services, we are not doing that 100% alone. So if you look at many of the services that today we provide and we distribute are not built 100% in-house and just by Mercado Pago. We are partnering with many figures in the industry and in different markets to co-create this value prop. So when distributing investments, when distributing insurance policies, when we began with credits, we've never done this alone. It's always Mercado Pago playing with another actor or more than one actor in the industry to create this value prop. And of course, using the power of the distribution that we have to reach as much people as possible through our platforms. But just to make it clear, it's not just closing the doors, it's always opening the doors and doing this together with other partners.
Sir, in the back.
I'm Diego Herrera from IDB. A couple of weeks ago, we published a document on fintech in Latin America and the Caribbean. And we ran a survey for 400 fintechs in the region. And we asked what was their major challenge. And 67% of the fintechs said that it was scaling up and reaching volume. So from the perspective of public policy or any type of actions that policymakers can take, what would you need, the fintechs here in this panel, from policymakers to achieve that objective of scaling up and reaching that volume? Because sometimes the barrier is, let's say, regulatory or from policy, but sometimes it's also in terms of the size of the market and there's nothing to do there.
Any thoughts?
Well, from Monet's side, I think we're based on the concept of open banking and open finance. And Latin America, especially Colombia, still has a way to go through it. So I think incentivizing this sort of implementations, not only from the legal and the policy perspective, which helps a lot, but also from the business side, from the actors involved in this process. The bank has to understand that giving the users information is not bad. At the end, it's a complement for all the ecosystem to improve at the same time.
Maybe that's unless you guys have any thoughts on this, or Paula, do you any thoughts on the answer or the question?
Maybe just quickly, yeah. I think the key avenue to scale for Possession is partnerships. Like I said before, we've recently launched a new product with Safaricom, but this took about almost 12 months to get the regulator to approve. So I know partnerships can be scary for regulators because of concentration risks and all kinds of unknown, potential risks. But I think not constricting such kind of opportunities as well is an important thing for policymakers to consider. Because if we are going to access, millions of Kenyan businesses, we need networks like Safaricom. Doing it one by one is just impossible, I think.
Yeah.
Only to add to what Pedro said before, for example, the sandbox processes in each country are very important. So there is a time of flexibility to try things, to let the supervisor entity know and understand the process, to let the startup or the financial entity understand what they are doing, and not going to implement a new policy right away, but giving that flexibility to try the errors, the new improvements, and get a major scope of new implementations.
I think that's probably a good place to end, given that we've got double zeros on the screen. Because I think what I hear in the regulatory context, again, biased being the policy guy, is that there's a good time for policy to come in and create conditions and then to come out. I think this point that you just made, Josh, if it takes 12 months to really unlock an opportunity, I feel like that's a universal issue. That's often a capacity issue rather than a public policy goal, public policy problem, amongst other things. So I think that's a very clear example of how many things not only need to come together to create an environment for innovation and new services, but the timing does matter, the capacity does matter, having a clear vision, a mindset, which I think you really touched on, Pedro. Maybe we don't talk about that enough. In the DPI conversation earlier in the day, how much of having the shared idea of what it needs to look like. I think our colleagues from PICS were talking about that on your panel, David, is the team had a clear vision and a clear goal, and they can kind of get after it because it was clear. I just would like to thank all four of you for providing a little snapshot into the work you do and trying to keep it responsible. And I'd like to ask everybody to join me in a round of applause, and thank you guys for today.